This is Scott Caulfield with Sophos Wealth Management. Just wanted to give you a quick 2022 stock market outlook. So last year was the third really strong year in this US stock market. We were up almost 29%, and that follows gains of over 18% and 31% in 20 and 19. I think that's left us at one of the most expensive stock markets based on valuation in history. We're more expensive than 1929. We're more expensive than 1999 on many metrics. Definitely much more expensive than '07. And those have led to just horrific returns from these kind of valuation levels in the past. So I think it's something investors need to be aware of and, position their portfolios correctly. You're having a huge reversal of stimulative fiscal policy and monetary policy that we had coming out of our reaction to the pandemic. So all these kind of pandemic programs like the child tax credits, the stimulus, the eviction moratoriums, student loan debt moratoriums, all that stuff is rolling off, potentially ending soon. Monetary policy, they're going to end their quantitative easing program in March, and then potentially letting their balance sheet start to run off. Fed's projecting 3 rate increases for 2022. The market's even pricing in 4. So all these things are just going to be headwinds that were formerly tailwinds. And unfortunately, the Fed, which in the past has really wanted to pay attention to what the market wants and has not wanted to upset things, I don't think they're going to have a choice anymore because inflation's running hot. So we've got consumer price index inflation over 6% year over year. That doesn't look to be abating, and as long as that stays high, the Fed's going to have to continue tightening monetary conditions. So I think you've got a really expensive stock market with some tailwinds, and with the specter of inflation, you can't goose this thing up anymore. So I think it's a good time for investors to be defensive. And you're already seeing some of it play out, I think. You've had the ARK Innovation ETF from Cathie Wood down 45% the past year. You've got COVID darlings like Peloton down 80%. A lot of these SPACs that guys like Chamath were out there promoting are down big. So I think some of the froth is starting to get hit, and I think it's a good time to make sure that your risk is not out of alignment with your goals. Anyways, if you want to talk more about stocks, always feel free to reach out or check out more on our blog and website. Thanks.